actually check if your bank has passed the cut onto you. So it might take a few days, it might take a little while, but definitely be on it. Don't just expect hearing the news and thinking that it's going to get passed on to you. So it's really important to check that out. Welcome back to the Get Rich Slow Club. I'm Anna and I've got Tash here today, and we're going to dive into the Reserve Bank of Australia's, the RBA, their latest move, which is a cash rate cut. Now, this may be a bit of a win for some people if you have a mortgage, or it might be a bit of a loss if you have money in a savings account. We're going to break down what that means for your savings, your mortgage, and any of your long-time plans. So let's get into it.
So last Tuesday, the RBA slashed the official cash rate by 0.25 percentage points, or you might hear people say 25 basis points, which sounds a little bit more fancy. So it lowered the rate from 3.85% to 3.6%, and it was the third cut of the year, bringing it to the lowest level since early 2023.
So let's dive into some of the pros and cons. Now, if you have a mortgage, you are in a better spot. So if your bank passes it on to you, that is. Major lenders like Westpac, CBA, ANZ, and NAB have pledged to pass the cut on to variable rate home loans, with changes rolling out between August 15th and the 26th. So if the cash rate is passed on in full, mortgage holders with a $500,000 mortgage are set to save around $2,884 per year, with those owing around $1 million are set to save around $5,768 a year.
My bank passed it on instantly, which is fun. I got the email like an hour later, which is nice.
But did they pass it on right away? Because I got an email an hour later.
Yeah.
So that's the big difference, because banks actually make a whole bunch of money by not passing it on instantly. Whereas I think I saw online in some research that when it is a bit of a hike, then they pass it on much faster.
Oh, interesting. Yeah, I saw the stat that you left saying that Finder found that major banks pocket slightly more than $10 million a day for every day they don't pass on the rate cut. So for 2 weeks, that's what, like $14 million?
That's a lot of money. And that's money that could be in homeowners' pockets.
I saw that ANZ even did a bit of a sneaky where they raised interest rates just before the announcement. Like I think it was the week before. So they increased it by 0.16%, and then they might have dropped it again when they announced the cut, which is very interesting.
Yeah, and I think that was for new homeowners, not existing ones. But still, nonetheless, if you're talking to a broker and you're looking for different mortgage rates, that's something to be cognizant of.
Yeah, it's always good to compare between all the banks rather than just like, oh yeah, we've dropped it, even though it kind of like is like when you go to the shops and it's like, you've saved money on the price drop, but really they've increased it to then drop it.
Yeah, you see this on Amazon quite a bit where it's like a huge decrease. But if you go to Camel, you'll actually see that the decrease hasn't been a lot. It's actually the regular price because they increased the price the week before.
I feel like this is not allowed, but anyway, yay.
Yeah.
Some more cons. If you are saving money in a savings account or a term deposit or something like that, you're probably feeling this as a bit of a con, which will impact those relying on interest income like retirees or those saving for their first home. A 1.5% drop could cost savers around $150 per year for every $10,000 saved. Something you can do is shop around for accounts with higher interest rates, but remember this sometimes comes with extra conditions, so always look into the T's and C's. There's also just a ceiling on how high some of them will go, so be wary of things that come across like a savings account, but they're actually an investing product and they're not a savings account. I see those pop up, especially when interest rates are dropping. Depending on what you're using your savings for, it might be worth considering higher risk options like ETFs, but don't do this for your emergency fund, and always be mindful of your risk profile and whether it's right for you. Alternatively, if you're looking to save for your first home, you can also consider the First Home Super Saver scheme.
So if you're unsure of checking where your rates are at, whether you have a mortgage or a saving account, there's a couple things that you can look at. The first thing you can do is look at your savings interest rate and see whether it is comparable. You can compare it to other rates and find a bank that suits your needs if they have better interest rates.
I love the savings calculator spreadsheet that's on Reddit. You can find the link. I usually type best savings accounts Reddit to find I think it's like savings account leaderboard spreadsheet. It's very cool because they list some of the highest interest savings accounts and the conditions. Maybe it will be like a few days out of date sometimes. Usually people are pretty onto it, but I find that's a great place to start because it's not being paid for by Finder or CanStart who might rank things differently.
And then you can also see all the different conditions and whether they suit your needs, because that's the biggest question mark for a lot of people. The second thing you can do is review your mortgage so you can compare your rates. You can also talk to your mortgage broker and see if there's a better deal out there for you as well. Now, this might not be advantageous to do this multiple times a year, especially since we've had 3 interest rate drops, but it is sometimes worth talking to your broker. And the third one is to actually check if your bank has passed the cut onto you. So it might take a few days, it might take a little while, but definitely be on it. Don't just expect hearing the news and thinking that is going to get passed on to you. So it's really important to check that out.
It's important to weigh up the difference between or the impact of interest rates going up on your mortgage versus your savings account. Like often, I don't think most of us have $500,000 in our savings account, but I think the average mortgage can be $500,000 or more, which is quite large. So you can calculate your savings on your mortgage if your interest rate drops and also on your savings account if your interest rate rises. But remember to kind of focus your time and energy on the things that have the biggest impact if you've got a mortgage and an offset and maybe a savings account as well.
There's a lot of great mortgage calculators out there. And one of the things that we do for our mortgage is pay it off weekly. And this way you kind of get an extra payment in. It brings down your principal quicker. So those are things to consider. And funny enough, Tash, actually this week I did talk to my mortgage broker because we've been talking about debt recycling.
Oh,
but that's a whole other topic. But nonetheless, it was interesting because as I was talking to my broker, they were naming all the rates prior to the 25 basis points drop. So even if you're looking at a mortgage right now, you might be quoted incorrect rates. So you have to take that into consideration.
Oh,
because it hasn't been updated on the system.
Yeah. I was trying to see how much extra my borrowing capacity would be with the interest rate drop, but it was only $18,000. So I think there's a lot of doom and gloom in the media where it's like, oh no, when interest rates drop, people will be able to borrow so much more money, but it's not actually that much in the grand scheme of houses.
Yeah. I mean, 25 basis point isn't a lot. Like it isn't a lot, like 0.25%. Like it's not even 1 full percent, but it is something that you can take into consideration. The other thing is if you're going to have smaller payments, because that's another thing, like your payments might drop, you might consider actually paying the full amount that you were paying last interest rate or even 2 interest rates ago, because it'll help you pay off your mortgage faster as opposed to paying the minimum. Now, if cash flow is an issue, that money might be welcomed, but it is something to consider if you're paying off a huge amount of debt.
Yeah, if you're getting by, it's to create free savings almost, where you don't need that money exactly because you're getting by without it.
Yeah, exactly. And a lot of people look at their mortgage as a forced savings because you kind of have to pay off that mortgage, but it's a great way to think of it the opposite way in terms of can you actually pay it off more and faster?
I found news is getting more and more clickbaity recently, and I feel like inflation and interest rates and all that kind of stuff is really good views for news outlets. But it's important to remember that yes, this is the third rate cut in 2025, but we're still talking about small moves in the broader economic story. Rate cuts are a great time to review your savings and review your mortgages and review your financial situation, but there will be more rate cuts. There will be more rate increases probably in a few years as well. So it will continue to happen. So don't get too caught up in it all, but it's just a great time to review everything.
That's right.
Okay, bye.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invest or me at Ana Cristina.
The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Ana Cristina from Perla. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging.